Good evening everyone and welcome to session recap 9th of May 2016. My name is Nenad and today we will see, as always, 5 different setups. Euro dollar, pound dollar, Australian dollar, dollar CAD and euro yen. So as you could see, probably there was a bit of movement last week and we had some great trades during our session recap, after session recap. And I have chosen dollar yen to be the trade of the week because it was really awesome. And before we begin and delve deeper into past week results, first we need to hear a bit about a risk disclaimer. Online education materials are available by Admiral Markets Estonia for a global audience, so take into consideration that information in this session is not suitable for everyone. If you want to get corresponding information on charting conditions and any other detail, you should visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And final part explaining that Admiral Markets will take no responsibility for information accuracy. This is solely my opinion, and this webinar is for informational and educational purposes only. If you don't know yet, you can, just for your information, you can download Admiral Markets Supreme Edition that will greatly empower your trading. You can do that by logging into your trader's room. Of course, by going directly to this address, you can see the enhanced web trader that allows you to trade directly from the web. And you can get a 50% up to deposit bonus by opening a new account. And don't forget that Admiral Markets is officially best MT4 broker. So with having said that, we are ready to proceed. So you need to give price a breathing room always. We trade always in the zone. You enter 15 pips, you can enter 15 pips of the predicted level if it's in agreement with your system. We call it a POC or a buffer zone. Use scaling in. Scaling in is a great way to actually make your good trades exponentially win. And if you have a losing trade, it will make exponential, it will lower your loss. The losses always go exponentially lower. For example, if this is a 15 pip buffer zone, you can opt to enter 0.10 here, 0.10 here, 0.10 here, 0.10, total of 0.4 lots with keeping your stop loss intact. The point is, this is lot size. You always determine your lot size according to your account. You don't risk more than 3% overall on all these trades. So if you want to take all these setups and you see that all these setups can be hit, you need to risk approximately 0.5 to 0.6 per trade, percent per trade. So always watch your risk management. That will be your ultimate savior in the turmoil waters of Forex trading. Respect your stop loss. Your stop loss should always be placed correctly. You don't want to move your stop loss. The only way you want to move is if you're willing to accept more risk. But if you accept more risk, that is up to you. Add a spread to your stop loss. So if you trade from ECN account, then you should always try to think about just a little bit of adding to your stop loss. So at least 2 to 5 pips you should add to your stop loss. It will keep your trade safer. We take only one position. So this means that if we have 5 different setups, we will have 5 possible positions. So you can enter all 5 positions, but only position or alternative trade. So if we see that positional trade is hit, then we don't take alternative trade. If we see that alternative trade is hit, we don't take positional trade. The only exception is breakout. You can treat breakout as a separate trade. Also, you can treat scalp trade, if I give you a scalp trade, as a separate trade. So that way you can have 2 or 3 positions for one pair. For example, last week we had on euro dollar we had a breakout position, but we also had a positional setup. So on euro dollar we had two positions. Okay, now questions will be answered later, guys, so just for your information. Also, alternative trades, we call it counter trend trades, and position trades, we call it trend trades. Breakout trades and scalp trade levels are done independently. Usually it can be a second entry. Depending on time and volatility, usage of trailing stop is highly recommended. We use it usually after 20 pips of profit, not less. These setups are valid for today, tomorrow, and sometimes the day after tomorrow. Scalp trades should be done at or very close to important support resistance levels. All those trades are calculated by historic levels and Camarilla. You can add these levels to your system. Pay attention to my Twitter updates and know that pips pool the term we use for the maximum available number of pips you could have got on recap entries. Past week results: euro dollar plus 55 breakout setup, plus 40 positional, so total 95 pips. Okay, so that is when this is a good example when I say you can make two trades with one setup. We can make positional or alternative with addition to breakout trade. Pound dollar was a loss for minus 40 pips. Australian dollar was good for 70 pips. Euro GBP didn't qualify. Dollar yen gave us 90 pips. Total pips pool was 215. Trade of the week, definitely euro dollar. Okay, that was the trade of the week. No, well, I have chosen dollar yen, but in this slide I made a typo. But nevertheless, euro dollar could also be deemed as a trade of the week, because roughly they gave us the same number of pips, but dollar yen was really, in my opinion, maybe even better. But let's see. Okay, this was breakout setup on euro dollar. I know that you have voted for euro dollar to be the analysis of the week. So whenever I post the poll on Twitter, in your opinion, what was the trade of the week, you use the analysis from the website. This is just for session recaps now. So breakout setup was initiated exactly at 1535, just 1 or 2 pips above this breakout point. And this is what happened. Straight towards our target, and almost it went to 1630, so maybe you could have made like 70 pips on this breakout trade, but let's say that first target was hit, so I counted this as like 55 pips, but you could have made even more. Now this was positional setup here, and if you had taken the position here, you would have made huge number of pips here. This was another chance, but probably you have entered here, because I say you trade the first touch of the zone, and you can see it here. The price was at very close to 1460 here, and it made a very, very good number of pips. And if you had taken this setup, you could have made even more. I counted this only as 40, but to be honest, this could have been like 60 pips easily here. Pound dollar was a loss. Well, you can see a huge drop here, and 46 gave us some pips, but only 13 possible pips, so it was not enough to be a qualified winning trade. Dollar, Australian dollar was good. It was cash rate announcement, but many hours after cash rate announcement, this happened. So you could have made great number of pips. I hope that you made something out of this. It was very, very, very good to trade. See, it went here exactly at our POC, and then it dropped heavily. Euro GBP, well, we got our trend correctly captured, but unfortunately it didn't make a pullback towards our POC. So it was in uptrend, target was hit, almost hit, but unfortunately didn't make a pullback. And dollar yen, well, this was the trade of the week. Well, you could see this was the entry, very, very good entry, and straight down. It was a straight drop. So you could have made also good number of pips. So dollar yen was also one of the, well, I can say not the only of the best trades, but definitely with euro dollar the best trade for the previous week. Now today's setups, you see this is euro dollar. Well, this is ranging market now. And as I told you guys, I need to say I was buying the dips on euro dollar, and you know that, and you can see easily that 1385 was good to buy into. Now the problem is that this range is a bit long in my opinion. So I still think that 1385, 70 to 85 is good to buy. But the problem is if it breaks heavily, it will give us 1325. So next spot for buying is 1325, around this level. 1295 is stop loss, and 1450 is the target. But here, guys, I would look to sell. 1455 sell, 1490 stop loss, 1360 is target. The only breakout is the same one we had previous week. If we see that the price broke through 1530, I would place a breakout trade towards 1590. Let me show you the chart. So here, guys, 4-hour time frame, euro dollar, whatever hits first. So we don't know which one out of these positions will hit first. But if we see a sell, I would sell it here. If you see a buy position, I would buy it here. In between, well, no setup. You see, this is important, guys. I know that a lot of people simply underestimate the power of the price. But look at this, guys. Look at this. Well, this is clear uptrend at this stage. Now, I said ranging because 4-hour is ranging. Look at this. This is a range. So there are still, you see, possibilities to go long here. So I'm just careful because this is bullish candle, and yes, from this spot it can go up. Yes, this is daily pivot. This is daily pivot. We can switch on to weekly, but it doesn't matter, more or less. See, this is our selling spot. See here. So this could be a buy according to price, but I would really prefer to buy it a bit lower. Now if we draw a line here, you see it's very close to 1325 that I told you. So this is like an X cross vertical line, and it has a confluence with L3. If we make a Fibonacci retracement here, okay, you can see that this level here should protect it, another X cross here. This could be the ultimate support. So if this level breaks, this could be a long position. Stop loss goes below this, where I said, okay, here, 1295, and our target is there. So this is the range, guys. You see, you can define the range clearly. Even though we have a steep trend line, I don't like these kind of trend lines. But you see, guys, this is where euro dollar is contained. So we should expect a movement soon. According to the laws of price action and principles of price action, this should be a congestion. So if this breaks, it should go somewhere. You see, either here or there. So this is still a range. And because of the range, we want to be careful. So pay attention to sell, pay attention to buy, and only breakout is above 1530 here. So let's see what will happen. We don't want to guess, we want to react. So based on our analysis, we will react if something of this happens. Pound dollar is in downtrend, 44.80 positional buy, 45.30 is stop loss. Sorry, this is mistake. So this is a sell, guys. Wait, I will correct this. This is a typo. Okay, give me just a couple of seconds. I will correct this. So this is a sell position. So sell position here, and it should be red. Okay. Okay. Yeah, target price also, guys. Wait. I don't know why I have target price 40. Oh, this is crazy. Wait. Okay. Yeah, the thing is, I do this analysis prior to our webinar, and I'm very careful about the time. So that is why it's 43.80. That is why I make it with typos. Okay, and this is it. Yeah, 44.80 sell, 45.30 stop, 43.80 target. I would go with a buy position at 43.10 with 42.90 stop loss, 43.80. 43.80 is, I will show you now, 43.80 is a good level, guys, and I think that 43.80 is now keeping this pair from further down. So now if you watch 4-hour time frame, guys, this is clear uptrend. But 4 hour is ranging. You see, this is what I don't like to see. What did I tell you last week at our webinar? This is what I don't like to see. 2 pin bars side by side. This is really nasty, guys, because this is what I don't like to see. Simple as that. Yes, Dinas, either one wins. So if you remember my webinar from last week, I told you that on our webinar, I told you that this is pin bar, now moment buyers. This is pin bar, now moment sellers. So who will win? We don't know that. And this is one of the conditions where simple, you don't trade. You don't trade when you see this. Side by side pin bars. Look at this. Side by side pin bars. I don't want this. This is also, I simply want a clear noise. So watch out for the noise. That was it was not a webinar. I think I made it in one of my blog posts. So check my previous 2 blog posts and you will see which conditions are not good to trade. And this is one of the conditions, guys. Pin bars side by side. We don't want to see this. Yes, Brexit is still in place, but fears of Brexit are somehow diminished. And don't forget that you have Bank of England meeting where they will decide about their cash rates and further policy guidance, and the meeting will happen on Thursday. So what can happen is, if traders expect the meeting to be bearish, well, dovish, they could spike the price up and try to sell it later. Or if vice versa happens, they want to spike the price down and buy it later. So that is the indecision. There are buyers who are telling, okay, it's time to buy, it's too much to the downside. But there are also sellers who are telling, okay, but well, guys, we are winning, so Brexit is still in place and we don't want to buy pounds. So the battle between bulls and bears, clear battle, guys. You can see it here, side by side, pin bar, clear battle between bulls and bears. Who will win? We don't know. But we know where we could place our positions. We don't want to be on the front lines. If you are on front line on the battlefield, well, you're a cannon fodder. You don't want to be a cannon fodder. You want to be a strategist. You want to be behind and you want to actually lead. Okay? You need to be smart. So this is what I see for pound. This is my sell spot, and I would like actually to sell, and this is our buying spot, buying POC zone. Okay. Hi Ilya, no problems, welcome. And traditionally you will see that 43.10 to 20 was actually a good long zone for long trades. Okay, 43.10, 43.20, look at this, guys. Look at this. Breakout, false breakout, breakout, retest, continuation. So this is 1, 2, 3, 4, 5 times bottom. Look at this. Look at this. So this is strong level. And I expect reaction if pound gets there. Because this is the level where previous swing was good for 460 pips. So I think the price really could go up from this spot here. And of course, this is our selling zone. And 44.80 still good to sell into because of these pins that also make for a trend line here. So we need to be patient. Australian dollar is in downtrend. As you can see, today I told you that the option is sell on rallies. And well, Australian dollar is a bit, I don't know. I don't agree with the Reserve Bank of Australia. I cannot judge the decision of policymakers, but let me tell you that it could be a stupid decision to cut the rates now. First of all, Australian dollar is a hard commodity currency. Australian dollar is addicted to debt. I explained that in my Australian dollar forecast today. Their inflation targets have not been met. And the problem is, I expect, at least under these conditions, I expect a new rate cut in August. So what can happen is they will create more debt. And if they start to create debt, Australia can turn into USA or Japan that are totally full of debt. And that is not good, guys. Okay, that is not good because that is a bubble that can explode. USA, Japan, they are full of debt. And well, it wouldn't be good that it happens to Australia too. So I'm not sure that this was the right time for RBA to cut the rate. I don't know. I'm still don't know the real reasons why they did it, because I cannot find it justified. I'm also an economist and I follow all these fundamental readings, news, data every day. So I have the right on my own opinion. Of course, I cannot decide because I don't have the power to decide. But if it were me, I wouldn't call for a rate cut now at this time. So fundamental analysis is aligned to technicals, and I see sell on rallies. So this is sell position, this is possible counter trend buy position, and possible breakout sell will happen at the break of 72.85 to over 72.20. Stop loss goes above last 1 hour high. Not do that. Don't do that. It can be double-edged sword. Don't just trade the price because you see that the price will go down. You need to wait for rallies. Of course, you can drop into lower time frames and make some scalp trades. But the thing is, it's always best when you make a positional trade to wait for some pullbacks, guys. Okay? You can also wait for some pullbacks. And it will be the safer way to trade. So once more, guys, here you can see the analysis here very clearly explained, and I hope that it's clear. Okay? Sell on rallies for Australian dollar. Dollar CAD, what can I tell about dollar CAD? This is correctional uptrend, if you ask me. Well, clearly correctional uptrend on dollar CAD, and I will look to sell dollar CAD. 30.40 will be my sell position. Stop loss 31.28 will be the target. Okay, so dollar CAD close to our sell spot. Here we have tons of historical sellers. Look at this, guys. Well, 30.40, 30.50. Well, that is it. Look at this. Selling, then another selling, then huge selling, and correctional rally here. So yes, this looks like uptrend. Interim uptrend is okay. This is interim uptrend because you see, but general picture is still down. See, if you make a Fibonacci retracement from most obvious previous swing high and swing low, guys, 30.40 is 78.6. H3 weekly pivot point and historical sellers. So this is where I would look to sell. Okay, I think that this could be a good trade, so let's wait. And finally, Euro-Yen. Again, correctional uptrend on Euro-Yen. Positional sell 12.40, so 124.60, 125.00, 123.60. This is buy trade. So Euro-Yen. Well, I will explain questions. Now just let me show you this. Look at this, guys, Euro-Yen. So it's still downtrend, but this is a correctional uptrend, and we have W here. Bullish, see? Yes, Ilya, don't worry, I go through slides later. So look at this. So 124.60 will be your buying spot. So around this level here, W, and if we see a retrace, and selling can happen, so sorry guys, 124.70, like this, 60 to 70, this is your zone. and for selling is 124.60 here. See? Buy zone, sell zone. The price is in the middle of nowhere now. No man's land. So we want actually the price to drop, because you could go with breakout of this one, but it's on 4-hour time frame, so I use it as a cue, not to trade, because I don't trade 4-hour. If I see a setup on 4-hour, I zoom into lower time frames. So 4-hour is telling us this could go up, because this is W, bullish. But also overall picture on Euro Yen is bearish. See? This is a swing for a sell. So we want to see either a buy here or a sell here. But according to price action, this could go up now, because this is W. It's been broken on 4-hour, but it lost its momentum because now it's end of day. So no, there won't be a huge momentum now. We need to wait for Asian session to kick in. So guys, pay attention to it. It can be either a buy or sell. Okay? So now it's time for questions. The first question was, can I show you stop loss when I do the analysis on admiralmarkets.com? Well, obviously, if you take this trade here, your stop loss should go above last high. And if you take a trade here, stop loss could go either here or there. You need to watch the price at the moment you're buying or selling, because this is the analysis. We want to sell here or here, but I don't know which will be the height to actually place a stop loss. We need to see a high, and we go with above last high usually. So that is what you need to do it yourself, guys. Okay. Another question. 1 minute euro dollar. Again, 1 minute. Why would you need 1 minute euro dollar chart? I can show you, of course, but I'm not sure why would you need 1 minute. You would really like to trade 1 minute, Ilya, now. This is 1 minute chart. Which duration of rescroll? Ah, the slides. Yeah, sure, I will show you the slides. Hi, edit. Okay, Joseph Sender asks, what kind of platform you use? This is MT4, Admiral Markets platform. You can download it on admiralmarkets.com and just log into the traders room and you can download it freely. Yes, Ilya is saying never trade M1s. Yes, Ilya, don't go on M1 except if you are extreme scalper. Okay, next question. Is weakness on Aussie correlated on gold? Well, let's see. Correlation, well, there is a correlation. So this is what we will do. 1 hour, 200 bars, and we have Australian dollar. Yeah, the Australian dollar is correlated to gold. And here, so you see the correlation, gold and Australian dollars minus 21. Well, what I know is that Australian dollar is more correlated to iron ore and copper. And gold is also, well, the metal, and Australian dollar is correlated to metals. But I think it's more correlated to iron ore. Unfortunately, I don't have an iron ore symbol here, so I cannot give you the exact correlation. But the thing is, yes, it is correlated to gold. Now, if you want to see on let's say last, you see, last 500 bars, it's minus 57. So yeah, correlation exists. See, last 100 bars, last 200 bars. See that there is a correlation, negative correlation. Okay. Next question is Orient. I'm sure is 79.35. What do you think? Orient 79.35. Well. Yeah, you might be right. Because now the problem is that Orient, you see, there is a double rejection at this point. So you might be right, although as I say, it's a bit of I don't like the timing now, simply because it's end of day. But yeah, you could be right indeed. You could be right indeed. But the problem is it's end of day. That is the only problem. So Michael, if you want to actually secure your pips, try to protect your trade, because 15 minutes, look, too many buyers. So I wouldn't trade now at this point, but I know you might be stuck in a trade because it doesn't go anywhere. But look, it looks like a bullish pennant. See, 15 minutes. So I would be careful with shorting. Okay, I advise you to protect your trade. Joseph is asking, you have a lot of expert advisors. Where can we find them? You can find them on admiralmarkets.com Supreme Edition. So the thing is, you need to use Admiral Market Supreme Edition. So if you go to Admiral Market Supreme Edition, you can download it by logging into your trader's room. Okay, here at this spot you can find MetaTrader Supreme Edition. You see there, you can download it here. Okay, so you can do it from this. Okay, you can also go to your trader's room, but you can also do it from here. Okay, next question, dollar yen. Dollar yen. Huh. Yeah, I was looking at dollar yen today. I didn't find anything interesting besides the fact that it's also a correctional uptrend. I need to put the whole retracement here, and you see the only way I would look to sell, even now I'm not sure that I would do it here, 109.00. Yeah, this could probably be a sell trade. But more, you see, it's a weekly pivot, so you can see a sell there and also here. So definitely this region here is a zone for a sell trade. Okay, here, this one. So be careful, definitely be careful. You don't want to be caught in a trade that goes nowhere, so be careful. Watch for this for a sell zone. Gold and silver. Gold is, well, you can see it goes down now, but it's also correctional move. On 1 hour time frame, it's huge down. So you need to watch 4 hour time frame. Here, guys, we need to place a Fibonacci retracement. See, not just a mere coincidence that it's being rejected from this level here. So this could be potentially a long trade here. Yes, guys, don't worry, I'll go through the slides after I finish the explanation. So this could be a potential long trade on gold. Let's see, guys, just give me. See, very interesting. Ha, look at this X cross here. Interesting observation. Now this could be either make it or break it. See? Look how it reacts. Look how it is reacting. It is sitting here around 50%. It's a very it's strong. It's a strong magnet for the price. It's sitting at this level. Look. So pay attention, guys. Pay attention to this level. It will either make it or break it. Definitely. Silver, I'm not a big mover, head and shoulders here. Clear head and shoulders here, and you could have made nice pips by trading this break. See? Head and shoulders. It's leaned head and shoulders. Left, head, right. Left, head, right. See? So it should go down. But, well, this is also a support. So it should go probably here. Next question, can I show the euro-dollar market plan? Yes, after I finish with the explanation, I will go through the slides. Do I have to open new account or old live account will be okay for Supreme Edition? It doesn't matter if you have one live account with Admiral Markets, you can use Supreme Edition indefinitely. Okay, next question. There are a lot of expert advisors. Joseph, those are the part of Admiral Market Supreme Edition. So you download the edition and you will be able to use all of these expert advisors. Okay? Yes, Admiral Markets demo account supports Supreme, but the problem is it's only valid for 30 days. New Zealand dollar and euro GBP, and then I will roll the slides. Okay, first New Zealand dollar and GBP, and I will roll the slides. New Zealand dollar. Guys, this is historical, where historical buyers are. So pay attention for a possible bounce from this spot. There are a lot of buyers here, so I don't see the purpose of selling now. Definitely, guys, not selling. At least I won't do it. So pay close attention. Don't rush unnecessarily. You don't want, as I say, you don't want to be stuck on a trade. So be careful with it. Okay. There was a buying here, so it could reject. Euro GBP, nothing. I don't like this. Look at this. Pin bars, same as with pound dollar. Watch this. Well, who will win the battle? Sorry, here. Who will win the battle here? Euro GBP. Who will win? I don't know. I don't care. I don't trade this. And I won't be trading it until I see a clear price action. I don't like this price action. Not at all, guys. It looks weird to me, really. Who will win? How can we know who will ultimately win the battle? Hard to say. And finally, the slides now, and then GBP Swissy. Okay, GBP Swissy. Now let's see the slides. Euro dollar. Pound dollar. I will go slowly with this so you can snapshot. Australian dollar. Dollar CAD. And Euro Yen. Alexa is asking, how can I see screenshots? I'm showing the screenshots now, Alexa. These are the screenshots. Euro dollar, pound dollar, Australian dollar, dollar CAD, Euro Yen. You can print screen. Just press print screen. If you have Windows 10, it will automatically, you will automatically see the option to add it to OneDrive. Or buy a smartphone, yes, and you can snapshot, but it's easy. Joseph, I don't use time frames. I analyze zones because my Camarilla MACD is not based on time frames. Camarilla MACD, the analysis that I do is based on zones. So I don't care about the time frame, I watch zones. The only thing why I care about time frame is actually trend. So if I spot a trend on 4 hour, I will use that as guidance and I will try to find spots for rallies. So as you can see, my analysis is totally different to 95% of the analysis out there, because most of other analysts do their analysis based on indicators. I do the analysis based on price. So I use time frames just for direction, and I use confluence points for going with the direction. Okay, so that's it. And finally, GBP Swissy. GBP Swissy, look at this, guys, huge movement on GBP Swissy. Huge movement. It seems like GBP Swissy is in uptrend, but also, guys, watch for this trend line here. Okay, this one, and we have another trend line here. So this one is make it or break it. Yes, it's inverse to Euro GBP. Inverse to Euro GBP, indeed. Let's see. Yeah, minus 90, complete opposite movement. So this is a good, spot on, Ilya, very good observation. So you see now why these webinars are useful. You are just getting accustomed and learning a bit about correlation matrix. That is a very good stuff that you can, that it will, and I say it definitely helps your trading. So guys, yeah, very, very useful tool indeed. So that was it. Ilya is living in Swiss. Well done, Ilya. Well, it's a great country to live in, indeed. So, okay, I don't see any questions. Jeff is saying, great job, and thanks, Nenad. Well, thanks, and you're very welcome, Jeff. Ilya, see you next webinar. Thank you, Edith. You're very welcome. Okay, I don't see any questions. So that was it. Guys, follow the analysis on admin markets, follow our webinars, and you will be safe to trade as always. Cheers, guys, and trade safe. Good luck, everyone. Talk to you very, very soon. Cheers.